Stop messing around, stop fooling around, stop delaying, stop procrastinating. Get up, get out, get it done. Everything is possible, nothing is a problem, and anything can be overcome. I just get my ass up out of bed, I get my shit together, and I get out and I start the fight. And that will transform you from a mere mortal into a superhuman being. I've never, ever, ever met anybody who told me that they got rich watching their IRA or their 401k.
Welcome, Peter. How's it going?
George, I'm so happy. Happy summer. It's nice out. I don't know.
It is.
It just helps me keep my mind off of the fights that go on every day.
Oh my gosh. Yeah, seriously. I mean, as you know, I'm a delicate flower. So,
you're a delicate flower.
So as
everybody get to know George, the delicate flower of Siegel Capital.
Yeah, so as the sun comes out, I'm feeling good. So we have this tweet. Let's go start with our reaction.
Who's it from?
So this is Strip Mall Guy.
Strip Mall Guy.
Yeah, which it sounds.
Let's hear. Already, I'm intrigued, but let's hear what he's tweeting.
Do you want to read or do you want me to read?
I'll read it.
All right, cool.
Is this it right here?
Yeah, this is it right here.
All right, from the Strip Mall Guy. I spent the week wandering around a neighborhood where we're looking at buying a strip mall. He's the Strip Mall Guy. I spoke to endless locals, tenants, and random passerbys, and we now know more about the property after 5 days than the owner does after 20 years. Due diligence is like solving a puzzle. You gotta love it. Yeah. So, all right, I have all sorts of comments. So you have to do your due diligence all of the time. It doesn't matter what property you're buying or what business you're buying or what investment you're making. Due diligence is fundamental to smart investing. Due diligence is fundamental to deploying capital into your business, to buying someone else's. You want to buy stock through a broker or E-Trade, you have to do your due diligence. You're going to buy crypto, perform due diligence. You're buying real estate all day long. You have to have an army of due diligence that you're constantly pursuing and nailing down, because if you don't, you're going to get caught with your pants down. So I agree with Mr. Strip Mall Guy. You have to do due diligence. It's absolutely paramount. You need to know everything. If I ask you a question about a property or business you're buying, you better not tell me I don't know. In fact, you better produce all sorts of facts and data and reports and numbers showing me how deeply you know the answers to the question that I'm asking you. But I tell you what, George, I don't love that Strip Mall Guy is in the strip mall business. It's not great. It doesn't have the resiliency that multifamily does. You're mostly left with a small potential renter pool of mom and pop regional and local businesses. They're not well capitalized. They don't have a lot of money for build out and fit out of the space. They don't have enough money to give you security deposit and pay asking rents and market rents. These are small business owners. They just need the money to run their business. They could be out of business in a year or 6 months or 2 years, whatever it is. You're looking for credit-worthy, credit-rated tenants to come into your space and put up lots of money as security, a line of credit. They want certain things in a build out. They're going to have to build it out, or maybe you provide a vanilla box and they do the finishes and fixtures. That's typical, but they have to have the money to do it. Small mom and pop local and regional operators don't really have the money for this kind of stuff all the time. And we're talking about 1,000 and 1,500 and 2,000 square foot spaces, because strip malls are really a bunch of smaller spaces with like one anchor or two anchor tenants on either end, whatever you have. But it's not like these are 10,000 and 50,000 square foot spaces that you're getting credit rated and national tenants to move into. You're talking about shoe repair, nail salons, hair salons, maybe a franchise or two. Look, I love all these businesses. Small business is what makes the world go round, but they have to have money in order to open up in your building. And a lot of these smaller operators just don't have the capital to compete. And you have a lot of vacancy and a lot of turnover as a result. And a lot of times when the vacancies occur, you have to do more tenant improvements and more fit outs for the next guy. And who knows if that's going to mean lower rent for the next, it's a mess. It's not the greatest business. If someone gives me a strip center, I'll take it. If someone allows me to buy it from them for $1,000, I'll buy it. But the price has to be like crazy, no brainer, super low. Otherwise, I just don't want to be in that business. I want the resiliency, the consistency, and the reliability of real high quality real estate occupied by tenants who have a low likelihood of vacating and who have a high likelihood of collecting rent from. not really strip centers. So I don't love it for that reason. I've spoken way too long about strip centers, but let me tell you, I don't love strip centers.
Yeah.
You give me any piece of real estate for free, I'll take it, but I don't love strip centers.
Strip mall guy was rich for a reaction. That was great.
Yeah, well, good luck, strip mall guy. Maybe he'll change his name to apartment guy or
maybe.
self-storage guy or something else guy.
It'd be an interesting turn.
I wonder how many strip malls this guy has.
That's true. Yeah, I'll have to double check.
Can we tag him and make him answer like what his portfolio is?
Yeah, 100%.
Maybe he's like the one guy focusing on strip malls.
Yeah.
Most strip malls are owned by like legacy owners because like no one wants to buy them.
Yeah.
If they're really cheap, we'll buy them.
Yeah.
But nothing's really cheap these days. We're entering a severely different economic environment right now, so maybe real estate's going to become cheap again.
Yeah,
Let's see.
Yeah. All right, one more reaction. This is from a documentary from the 1960s.
Wow, which one?
It's called, let's see, Tomorrow's World, 1966.
Ooh,
and
I'm intrigued. I'm not familiar with it.
Yeah, so it's a bunch of kids talking about what they think the future is going to be like.
People will be regarded more as statistics than as actual people.
I don't think it's going to be so nice. I think sort of all machines everywhere. Wow. Everyone doing everything for you.
People are going to be statistics.
You know,
the world's not going to be so nice in the future. These are kids.
I don't think it'll be so nice.
In 1966.
First of all, those computers are taking over now.
Computers are taking over.
Computers and automation.
Wow.
And in the year 2000, they just won't.
In 1966, it was still post-World War II euphoria. You know, computers and machinery was new. Manufacturing jobs were plentiful. All sorts of jobs were plentiful.
Jobs. There just aren't going to be jobs for them to have.
Wow, there's not going to be jobs for them to have because of computers.
Yeah.
These were kids in 1966 that said all of this. It's not going to be a nice world. Computers are going to take over. Computers are already starting to come into our world. In 1966, she's saying that.
Crazy, yeah.
People are regarded as statistics. Yeah. What kid could say that?
Yeah.
This is amazing.
I know, yeah.
People are regarded as, well, look, back then in 66, people were regarded as statistics. Mm-hmm. And you know what happened in 76 and 86 and 96 and every decade thereafter? People continued to be regarded as statistics. Mm-hmm. Whether you like it or not, we're all consumers. Mm-hmm. We're all consumers. We think we have certain freedoms and choices and certain things that are unique about living in this country and in this world. The truth of the matter is the government has to track things in order to measure how to govern. So I don't really mind the statistical part of what this kid is saying about how we're all regarded instead of people as statistics. Yeah. I mean, I think you have to have a way of measuring things. You have to have a way of measuring incomes so that you can tax. You have to have a revenue and taxation system that works in our country. You have to have a voting system that works. You have to be able to measure and count and bifurcate people. Look, our government is the most divisive institution there is because it's always putting people into boxes, right? Mm-hmm. Statistics, right? Where it's making each one of us a stat. Yeah. But the truth is they have to do it because people want benefits. They want the benefits of their government. They want the benefits of their tax dollars. They need benefits of money and tax refunds and all the things that we get or that we need or we're asking for as citizens here. There has to be a way to measure and know who gets what. Yeah. And who has to pay what, who receives what. No one ever wants to feel like they're a statistic, but I really feel for this young kid who's identified it. He must be 8 or 9 or 10 years old, that people are being regarded as statistics. I mean, it must have hurt him so much. I wonder where this kid is now. I'd love to find out and see how they feel about it. I don't mind the statistics part. Let's talk about the AI and the computers. Yeah. 1966, I mean, we're talking about, at this point, it's 50 years ago, right?
That's the part that jumped out at me.
So it's incredible. They're perceiving computers as a threat to society back in 1966. Have computers been a threat, or have they enabled us to achieve and do so many great things? Have they allowed our society to flourish? We get information immediately. We're all connected to each other. Business happens so much faster than it ever has happened before. We can reach new customers that we never could have reached before, all because of computers. Cell phones, we're able to communicate so much more quickly and effectively than we ever have before. So look, there's two sides to every coin. I'm a fan of computers because it's allowed our world to have all the great things that it has in it today. And that I'm grateful for. I tell you what though, with computers and AI taking over all of the jobs like they're forecasting here, these young kids in 1966, if we ever get to a day where everything's a robot and nothing's a human, it's going to be a weird place and it's going to be a tough place. We need to make money. We need to show up and go to work every day and bring home paychecks to feed our family and house our families. So we could either work for the companies that are making all the computers one day. I think maybe that's where this is all headed. Or we're going to have some real big societal and economic issues that we're going to have to deal with. This is a really touching piece that you've played for me. And I can't believe that we just watched 3 or 4 kids talk about how they see the world in the future. And here we are. And it's everything that they predicted back in 1966. And they're not adults, they're kids. Where did they get that from? Did they feel it on a cellular level? Did they, how do kids know? They weren't teaching computers in school.
Right, yeah, I know.
I mean, the computers in 1966 were the sizes of buildings. They weren't home computers. They weren't accessible to consumers. So it's amazing that these kids were able to pick that out and talk about that in this video. Great stuff, man.
All right, well, want to head over to the table?
Thanks, George. Thanks, everybody. These are a little elegant.
NASA Space Pen. There's a whole story that NASA spent like millions of dollars developing that pen, and the Russians used a pencil. I don't know if that's true.
The Russians used a pencil in outer space?
Yeah, like that's the...
And therefore, why spend the millions developing a pen?
That was the joke, yeah.
Sounds like it could be true.
But I benefited from those millions of dollars because that pen is that's one of my favorite pens. It's so good. You mentioned brass the last podcast about using brass fixtures in apartments, and
brass pen.
Yeah, well, and I came across that brass is like cleansing, or not cleansing, but it's like toxic to cells, and so over 24 hours it cleans itself. So it's like an antibacterial thing.
I knew that.
Yeah, so that's kind of cool too. So
yeah, look at that. Fun facts with George. Brass.
We're going in the science direction today.
Cleans itself.
Yeah. What do you want to start with today? How do we want to get into this today?
I've heard a lot of people in the past couple of weeks continue to talk to me about investing, how to invest, what to look for when investing. I get that question a lot anyway, but the past couple of weeks it's been, like people are coming out of the woodwork saying, I have all these numbers that I got from the seller. What do I do?
Right, yeah.
And it brings me back to investing is based on fundamental principles, like a baseball bat swing, like anything in sports, like anything in the world. Yeah. There's fundamentals, and there's a right way and a wrong way to invest. The right way is you have to invest with a perspective that takes into account global, macro, micro issues. You have to do a lot of due diligence and ask the right questions and analyze the data. You can't just invest without doing that stuff. That's the right way, is to invest while performing lots of due diligence.
Right.
And looking at balance sheets and cash flow statements and considering debt markets and equity capital markets and all of this stuff. I mean, you really have to know what you're doing. If you don't find an expert, put your money with that person and let them invest with you or for you even.
Yeah.
But the wrong way to invest is just to put capital into things without really knowing what the documents say, without really knowing what the balance sheet is, without really knowing what the sources and uses of funds is going to be, without really knowing what past trailing years of sales revenue has been and what the future projections are and where the market's headed, all that stuff. I can't say it enough, and I pound the table. You have to know how to invest. It's like doing anything. You guys have to learn basic fundamental investment principles. There's a checklist of things, follow the checklist. DM me for some ideas on that. Maybe we should put together a checklist, my due diligence checklist for investing. But
yeah, that'd be great.
I get that a lot the past few weeks, for sure. I'm noticing an uptick in that. Maybe it's because we're talking about it, but
yeah, no, it makes sense.
I don't know.
No, you mentioned at the beginning of the podcast that summer's coming and you feel like good.
I'm happy. Everyone's happy.
No, totally, yeah.
We live in a part of the world where it's like summer for a few months and then it goes away to something else.
Yeah.
But
well, and that's something else I was going to bring up, that the word that keeps getting thrown around with crypto right now is crypto winter.
Crypto winter.
Yeah. So
we're in a nuclear winter where it's what we're entering.
Yeah. Seriously. I mean, like,
not just with crypto. Crypto is more volatile than other asset types. So it's got the perception that it's more wintry than other asset types. But let me tell you, shit is wintry everywhere with everything right now. And it's going to be for a couple of years. So buckle your seatbelts and put on your mittens because it's going to be cold and long and bumpy. I promise.
Yeah, that's what I was going to ask is, like, do you view this specifically with crypto, but I guess with everything too, as just a correction, or is this a longer term problem that you think crypto is revealing itself?
So every asset class in its younger infancy stages has to go through more volatile cycles. What we're seeing right now is we're seeing confirmation that crypto is very correlated to what's happening in the rest of the world. And as interest rates are going up, people are withdrawing cash. They're going to more cash. They're selling assets. and they're going to higher cash positions. So all asset classes are experiencing a price readjustment. Now, the level and depth of the price readjustment is going to be what we're all in for the next couple of years. Crypto has in the past lost 80 or 90% of its value entering the last bear market it went into. I think we're going to see that now. In fact, in some cryptocurrencies and assets, we have seen that. Bitcoin was at 65. It's at like 20,000 now. So it's getting there. That's already 66% right there. So, another little blip of a drop, and it's 75, 80, 85% less of what it was at its peak. And some other crypto assets are there as well. So crypto's more volatile. It's a younger asset. It's more sensitive to swings in other markets as the treasury rates go up, as interest rates go up, as people convert to cash. Crypto is going to have way more of a beta, right? Beta is the correlation to the other market conditions that are happening. It's going to have way more of a beta than, say, multifamily. Multifamily is really resilient and stable by comparison to crypto because every month that goes by, rent checks come in. People need a place to live. They're going to give up their apartment or their house last. They're going to give up their cryptocurrency first. And a lot of these crypto investors were wannabe investors that entered a crypto buying frenzy and just margined and levered up and bought crypto, and now they're getting squeezed. And it's unfortunate. So like we're saying, George, you have to know how to invest. You don't buy volatile assets and leverage up to buy those even more when they peak out. You're going to lose. You're going to get margin called, and you're going to get squeezed. You're going to lose your crypto.
Yeah, I follow Ramit Sethi, that finance guy, and he was putting out a call to see if there were any couples. He has this podcast where he does counseling with couples, like finance counseling.
Finance counseling.
Yeah, and he was so he's asking if any couples had, if one of the partners had lost their entire life savings on crypto. So because that's the episode that he's trying to develop.
And did
right
people
now.
Say yes? They did.
I don't know. It hasn't come out yet.
I bet they did. Maybe not on his show, but maybe.
No, I'm sure it exists. Yeah. I'm sure people have done that. So yeah.
Yeah. So look, for the long term, I love crypto. It's going to find its way. George, with me, I have a lot of crypto. I've put it away. I'm going to wake up in 10 or 20 years, whatever it's going to be. My bet is that it's going to be worth a hell of a lot more in 10 or 20 years than it is right now. But I'm using the dips in the markets to buy and accumulate more assets, not just crypto, but I'm waiting for it to happen with all sorts of other asset classes. Real estate stocks are getting hammered right now. It's almost time to start jumping in. I mean, even for me, I'm not a stock guy, but I'm recognizing that it's getting pretty darn close for me to want to jump in.
Yeah,
I mean, it's really compelling.
Yeah,
some of these tech stocks, and look what's happening. Every Amazon split 3 for 1, Tesla split 3 for 1.
Yeah.
Why are they splitting 3 for 1? These are the biggest companies in the world. Why? What do they know that we don't? They both split the same month. Because they want their share price to be less expensive, so that the common investor, that means uneducated investor, thinks that they can afford more of their shares and they'll buy more. You're more likely to buy something if it's $100 than if it's $300 or $400. So that's the unfortunate psychology that they are deploying onto us as consumers and investors.
And it works.
Yeah, it works.
Yeah. Yeah.
Look, a professional hedge fund manager knows what happens when a stock split occurs, and a professional stock trader knows. But like the layperson, regular, everyday investor that has money in a 401k or in an IRA or something, I mean, they don't really know how these markets behave, and they don't know the catalysts, stock splits, and other market events are upon our buying behavior.
Yeah.
And so look, I see crypto as it's a way long-term hold, very long-range, long-term hold. Right now, I'm going to sit it out and wait. I'm going to start accumulating. If it gets a little lower, I'm going to start accumulating some things. And again, not just crypto, but I'm looking to see all asset classes readjust and recorrect. George, before the pandemic really started hitting in early 2020, our economic worlds and markets were already overinflated. Already. So if we price adjust or correct or crash, pick your word, back to the levels of late 2019, we're still overheated. We have to go even further, back to levels that are maybe from years 2013, 14, 15, and see what asset prices and earnings and profits were back in those years, because things were really hot and overheated in 2019. The pandemic came and just threw a kick in our ass.
Right.
Supply chain issues, printed all the money, inflation. So prices started going crazy and everyone's making a lot of money and there's all this money in the bathtub floating around that we never had before. But we really have to get a sense of where asset values are going to stabilize and bottom out. For me, I'm going to look back to 2012, 13, 14, when things really started to gain some steam after the last correction that we had, which was the 2008, 2009 corrections. And I'm going to look to peg asset values now to those years. Mm-hmm. And I think for me, that's what I'm comfortable with. You guys all have to be comfortable with your own evaluations. And where do you think prices for assets should be? Mm-hmm. I mean, it can't just be a random number. It can't just be like a gut feeling. You have to really try and base it off of data and facts. Another thing that I'm repeating is we were talking about how to be a good investor and to invest correctly. You have to look at numbers and facts and data. So the data that I'm going to look at is to see where asset prices were maybe about 7, 8, 9 years ago. I'm sensing that it's going to be probably 8 quarters, maybe 10 quarters of a nuclear winter, and it's going to be a tough time, and asset prices are going to be low, and people that are over levered are going to get squeezed. And if they have to refinance leverage and replace debt, they're going to do that at higher prices because interest rates are higher, and they're going to get squeezed even more, which means they're going to have to charge more money for the product or service in order to generate the revenue to service that debt. I'm being long-winded, but there's a point, I promise you. And if they have to charge more money for the product or service, maybe that's okay because there's an inflationary environment, or maybe it's not, and the consumers and the marketplace are going to bitch slap your product and service across the face because you're just not a good value anymore, so they're just not going to buy your product or service. So all of this is getting teed up, and it's happening right now.
You mentioned data and kind of working with data, making sure to run your numbers, all those kinds of things. I was going to talk about this later, but this is a perfect segue for it. We always discuss this, of you can't manage what you don't measure, how important
you have to measure everything.
Yeah. How do you gather data? So let's say OpEx, for example, although you can choose any category. How do you gather that data? Where does it live? And what does the execution look like when you actually deploy it into a real world situation?
A lot of different ways. Yeah. My finance department is generating reports to me all the time. We use very sophisticated database systems that can generate reports to me at the push of a button if I need to access anything on my own. My finance department's generating reports to me all the time. We have monthly meetings to look at these reports. We make business decisions off of the data that's in these reports that we look at every month. We have to know how to steer the ship. The direction of the ship is based on the performance and the numbers that we see in the reports that I'm getting from my finance department. I'm constantly looking at Bloomberg terminals, and I'm looking at data from the Fed, and I'm looking at the daily and hourly postings of the 10-year Treasury, the 5-year Treasury. I'm looking at international rates. I'm looking at the price of commodities. I'm looking at the price of gold, oil, all that stuff. I'm looking at it all day long. When I'm in the bathroom, I'm looking at it. When I'm at a red light at my car and I have more than 10 seconds, I'll pick up my phone and I'll see what interest rates and gold and oil are doing. I mean, I'm always looking at this data. So I'm consuming the data as much as I can and as quickly as possible because I have to make decisions based on the data. I don't want to make emotional decisions in business. I want to make factual, data-based, data-driven decisions in business. Any source and every source that you can think of. George, I read like 18 or 22 newspapers a day, and each one of them is from different locales and regions around the world, and they each are reporting their own set of data. I got to consume that stuff. I'm looking at my bank accounts every day. That's a big thing. Just look at your bank account. Yeah. Are you sick because there's no money in it? Make a decision to put more money in it. Yeah. Are you celebratory because there's a ton of money in it? Well, celebrate it, but then get back to work and put more money in that bank account. So even looking at bank accounts is a simple data point that all of us can do every day. I tell you, when I look at my bank accounts, I get sick to my stomach because usually there's too much money in there and I don't want it sitting in there, so I have to deploy it into an investment or an asset, and that's problematic because you got to find the right one. Mm-hmm. Or I'm sick to my stomach because there's not enough money in the bank account because I just emptied it or whatever the case may be. Maybe I had a busy month. I spent a lot of money. I don't know. Yeah. But that makes me sick to my stomach too. So usually when I look at my bank accounts, I can plan on vomiting regardless of if there's a lot or a little bit of money in it. But everyone, look at your bank accounts because it's a great data point. You'll be able to make decisions. I promise you, the more you look at your bank account, the more you're going to get kicked in the ass and you're going to do things, even subconsciously, to make sure that more money funnels into that bank account so that you can deploy it, use it, spend it, whatever you want to do.
Was there a flashpoint as a business where you started to put in like intentional procedures of gathering some of these, data points? So like, because obviously when you start out, you just have a couple apartments.
I've always been a data guy, so it was always really important for me to have information and data. I don't think there was a flashpoint. Mm-hmm. I think when you're very small and young and you're on the ground hustling every day, dragging your knuckles across the pavement, you're probably less concerned with data and global geopolitical and economic information that's coming out from every country and every continent all over the globe. But like when you get to be a certain size and a certain point and you starting to borrow more and you've got your signature on loan documents and assets everywhere, you really are motivated to pay even more attention. But for me, there wasn't a flashpoint. I was always really aware and conscious of facts and data and numbers.
Yeah.
I mean, and anybody I saw who was in business, I saw them always looking at reports. I mean, any CEO or CFO or any person that I saw on the news giving financial reporting, they all had like tickers and the green screen behind them with like all sorts of different numbers flashing. That's what they're putting out there because that's what we need to consume. So I was always consuming numbers and data. I think everyone should. Don't make business based on emotional decisions. Sure, you can have a gut instinct and know in your heart if things are right or wrong. Make sure that the data and the facts and the numbers are part of that recipe, because without it, you're just making emotional decisions. You don't want to be an emotional investor.
Last week, we talked about Amazon kind of cooling its jets with its warehouse development for a little bit. But then this week, warehouse operator Prologis acquired its competitor Duke. And I think it's like $26 billion, I believe. That was
all
figure.
Stock too, no cash, all stock.
Wow, yeah.
That's a key part.
Yeah. So I was wondering, did you have any thoughts about like, is this the sign that there's just continuing demand in this sector, or is this peaking, or like where do you see this?
Well, clearly
going?
It's demand. This is the largest warehouse deal that's ever been done. So clearly there's demand.
Yeah.
I don't think there's a lack of demand. 6 months ago we needed warehouse and storage to hold a lot of shit, and now we still need a lot of warehouse and storage to hold shit. So the need doesn't go away. What we're seeing is that Amazon put on the brakes because they overinvested their own capital, locked up tons of properties everywhere so that they had distribution and warehousing capabilities that now with the recession and the pullback in consumer spending, they don't need all that capacity. But investors and companies like Duke and like Prologis, they have a need for that stuff. This is where they invest. This is where they deploy their capital. And if you want to grow, you can do it one of two ways. You can either buy new assets yourself or you can acquire a competitor. And that's what happened here. A competitor got acquired for all stock.
Yeah.
All stock. I love that part about it.
So what's the significance of that for you?
Well, the significance is that the sellers don't walk away with cash at the table. They walk away with stock. Maybe the stock's restricted. Maybe the stock is, I don't know the terms of the stock that they got.
Yeah.
But then they now have to turn around and go sell stock.
Right.
And we're in a market where prices of stocks and other assets are crashing. So they got paid $26 billion today, and literally tomorrow, if there's a big market swing, it could be worth $25 billion. Because they got paid in stock, not in dollars. This is where holding dollars starts to become more valuable. Because if they got paid $26 billion today, tomorrow if the stock market crashes, they still have $26 billion in cash, if that were to have been the transaction that occurred. But they don't. They have $26 billion in stock. So they're betting on the expertise and the execution of their buyer, which is a different transaction than a buyer just paying a seller in cash. They're still married together and tied together. Yeah, I think there's a lot of demand. Yeah, I think the sector's really strong. Yes, I think asset prices are very high. Look, if you want to be the biggest, you have to acquire your competitors. That's what happened here. It was bound to happen. We'll see. I'm sure Prologis has a lot of debt on their books. I mean, they have for the past 10 or 12 years. They've been sort of in and out of different sort of problems with levels of debt and cash flow and being sustainable. But they pulled this off.
Yeah,
and they control a lot of property now.
Netflix recently placed a bid on it's a 289 acre that we're both very familiar with.
I love that. It's our backyard.
Yeah, it's our backyard.
Fort Monmouth.
But so if anyone's not familiar, 289 acres, former fort of the military.
Smack in the middle of upper middle class suburbia. Median incomes are high, home prices are high, great school systems around. The likelihood of finding a great employee pool in this neighborhood, very high. Close to New York, close to Philly. Regionally, it's a very densely populated area. Transportation and access are tops. School systems are great. There's lots of goods and services. Route 35, Route 36 is right there. So all the things that you need as a consumer or a business are all right there. Yeah. So it's very exciting.
Yeah, I was going to say, you're not in the film business that I know of. I mean, unless there's a secret that you're keeping from.
I will discuss that with you another day.
Okay, sounds good. But It made me wonder, when a large player like Netflix moves into a local sector like this, are there opportunities that you're looking for or sensitive to? Like, what does that look like for you?
George, follow the jobs. When companies, big companies, move into an area, they bring a bunch of things with them. They bring money, they bring capital, they bring people, they bring jobs, and they bring a lot of consumption of a lot of goods and services. Yeah. So if Netflix or anybody else who's like that is going to move into Fort Monmouth, almost 300 acres in the middle of a densely populated, high-income, high-property value area, they're going to need lunch for a bunch of employees. Now, I'm not saying we don't have lunch places nearby Fort Monmouth. We do, but like you can now plan on the market for midday lunches going higher.
Totally.
You know, they're going to need automobiles, infrastructure, service, construction. They're going to need maintenance. They're going to need cleaning. They're going to need everything you can imagine they're going to need. And that need's going to be filled by existing businesses already nearby. And some opportunities are going to be available for new businesses to open up just to serve this new market that now exists, with Fort Monmouth being built out and occupied with, I'm sure it's going to be thousands of employees. Yeah. You know, these employees have to come from somewhere. And they're going to come from out of the region. They're going to move to the area. They're going to need housing. So if you're in the multifamily business and you have apartments nearby, you'll be able to provide housing to the people that are going to be employed at the perhaps Netflix Fort Monmouth campus. In our business of multifamily apartments, I follow the jobs. Follow the jobs, follow the companies. Oh, speaking of follow the companies, do you see who else is moving to Texas?
Oh, Caterpillar.
Caterpillar.
Right? Yeah.
Leaving Chicago suburbs, leaving Illinois, moving down to Texas. They've been in Illinois for...
It was like 55 years, something like that. It was like really
forever. I don't know. Longer than since I've ever even known about them. They've been in Illinois. And the company, Caterpillar, is 100 years old. I mean, this is like a blue chip, grandfather type of company, right? In our country, Caterpillar, right? Earth moving construction. It's like important name.
Yeah, that, and Boeing also recently, right?
Moving to Texas.
Yeah. So
why is everybody moving to Texas? I heard the Caterpillar said, yeah, we just felt it was the right move. Had nothing to do with like leaving Illinois, a blue state, and going to Texas, a red state. They didn't get into that.
They even said like incentives weren't part of it or something.
Yeah, they said incentives weren't part of it.
Yeah.
But let me tell you, you don't pull off a multi-billion-dollar move like that unless you're incentivized to. Yeah, and it's a real slap in the face for Illinois, who's trying to come back like California and New York and these blue states. They're trying to come back and incentivize and motivate businesses and companies to locate in their state borders. They want their people to be employed, not Texas people to be employed. But you know what happened, Illinois? Texas is now going to get all the employees. All those employees are going to need places to live. Thankfully, we're in the business of multifamily down there, so I'm happy about that. All those jobs are going to go to Texas again, and all those employees are going to need goods and services. They're going to buy from all the businesses down there. See you later, Illinois. I mean, it's a problem, and it's happening everywhere. Companies are leaving New York, California, Illinois. I mean, those are the three obvious big ones.
Yeah, and this has been happening for a long time, specifically with LA and New York. Like most of those industries have just completely shifted and moved.
Caterpillar employs tens of thousands of people, but they weren't in Illinois. The significant minority was in Illinois because it was a corporate headquarters, so it was probably like a few hundred. Yeah. But even still, you don't want to lose a few hundred people. I mean, that's totally a town. Yeah. That's like kids getting yanked out of school, houses getting onto the market at a intricate, challenging time. People are going to put houses on the market. Maybe Caterpillar will help in the relocation and the assistance of mortgages and selling the homes so that people don't take a bath. But look, if you're a state, you want companies and jobs to come into your state. You don't want them to go out. It doesn't matter if it's 300 or 30,000. You want to get those jobs coming in. That's your rateable base. That's your revenue base. That's your taxable revenue right there. So, I don't know what Illinois did or didn't do to allow this to happen, but bad on you, Illinois.
Well, I think it's also what Texas is doing. I mean, the environment that Texas has kind of created or facilitated is obviously drawing a lot of these,
Texas is, I find so interesting because most of the time Texas is really a red state. It's a red-leaning state. Yeah. You've got Austin, which is the bluest thing going on down there. And it's so funny because Austin behaves like its own blue state. And the rest of Texas is like, red Texas, but Austin is like this blue ocean. in the middle of this otherwise red state. I find that to be so interesting.
There's a Manhattan element there that happens too, where if in New York, as soon as you leave the city, it's all red.
Well, the more urban areas are, the more liberal they tend to be, and the more rural, the more conservative, obviously. So I just find it fascinating because Austin's not even the biggest city. Dallas, Houston, they're bigger than Austin, but they're red. So the coexistence of all of that, I always find really interesting.
Well, but I think also because it's so large, I think that's what's fascinating about California is that it is so large and yet it seems pretty monolithic politically, and that's intense as opposed to Texas. It would make sense that people would believe different things because it's such a large geographic space.
Yep. I keep reading more about the housing bubble that people are expecting to have happen in Austin.
Yeah.
And we'll see. I think there's no argument that housing prices got very overinflated, and year-over-year numbers were like 20 and 30% the past few years. Completely unsustainable, right? That has to level out and stable out. George, there was a time not long ago, just like a few years ago, where the normal thing for the past 20 years was like, let me just get 3%, 4%. God, if 5% increase in values and in rents and in housing prices happened every year, we were all ringing the bell, right? If you owned a home and your house increased 5% a year, in 5 years it went up 25% in value. If rents go up 3% a year, in 5 years, your rent roll is 15% higher. That means you're adding value just from rent lift, right? And it was 3, 4, 5%. That was like all we were looking for. Then we got like double digits, 20%, 25%, 18%, 30% in Texas.
Yeah, supply and demand, man.
Holy shit.
Yeah.
Double digits when 3 to 5% was what we were happy to get, and then it went to double digits like that. So, George, it's going to revert back to low to middle single-digit growth in these markets. So Texas is definitely going to have a correction. Interesting what's happening there. All of those markets, Houston and Dallas are the biggest rental markets in the country. Austin, it's a smaller city than Houston and Dallas, but Austin's a very big rental population there. So I keep looking at Texas because not only am I doing business down there and I'm spending more time there, but just a lot to talk about. All these companies moving down. You know what else?
Yeah. So I think I know what you're going to say. So let's bring it on.
So Houston, Texas, is having more progress in solving its homelessness issue than any other place in our country.
Yeah, amazing.
I find that to be amazing. I did a deep dive into that and I read about it.
Yeah, you sent me some of the literature,
and it's amazing that. California, that's got a big problem. LA, I think they say it's like 50,000 people are homeless in LA. Yeah. I think like another 30,000 are homeless in San Francisco.
Insane.
It's crazy.
Yeah.
Almost 100,000 people just in those two cities. I don't know what Sacramento's homelessness count is. But why can't California get it together? Right. California actually allocated money and budgets over years to dedicate to solving homelessness, and they haven't done shit. Texas, who you never read about, like, putting best practices in place for homelessness and stuff like that. Like, I've never heard of anything about that. Like, I always hear about what's New York going to do, what's San Francisco going to do for homelessness. Never hear about that. Houston has made such a dent. I think they've solved like 50 or 60% of their homelessness issue over the past decade.
The last 10 years, they moved 25,000 homeless people to homes, and most remained in the home after 2 years.
25,000.
Yeah, and it's 63%, they said, down by 2011.
Incredible.
Yeah, crazy.
So 63% down.
Yeah.
So there it is.
Yeah.
63% down since 2011.
The thing that I found fascinating was this combination of strategy, like the public sector seemed to focus heavily on strategy, and then the private sector on tactics. And that kind of combination seemed unique for this kind of problem.
You bring up a good thing. Yeah. All these great things that happen in cities and states in our country, they have to be public and private partnerships. Mm-hmm. The government can't do this stuff by itself. Yeah. Like, they can't. They don't have the resources. They don't have the know-how. All right, we talk about that all the time. Yeah. And they need money. So you get the private sector to pitch in money. Mm-hmm. There's a connection. You get the public sector to maybe take that money and hire the right teams and come up with the right action plans and execute. And it's magical what you can do, right? That's what we do in small business all the time. We marry money with expertise and we go out and we execute, right? So it's great to actually see this happening in real life with government. Yeah. I applaud Houston and the people involved for creating this result, because it hasn't happened anywhere else, because everywhere else is fucked up with bureaucracy and red tape and whatever. Mm-hmm. But I got to hand it to them. I mean, they really look like they've done it, and they're going to continue to do it. But it reminds me of something that we talk about all the time. They've done a lot of things. They've come up with money. They've hired people. They've dealt with mental health issues. But they had to have a place to put people.
Right, housing first.
You need to have housing first. There had to be supply. Without the supply, you can't house people.
Yeah.
So I recognize that as probably the first thing that they focused on. And I think they even said, right, housing first.
Yeah, housing
you need to have the supply.
Yeah. Housing first was a huge component, I think, because so many of these groups oftentimes make it contingent on the homeless person to either take Bible classes, like religious things, or get clean. You can't be using drugs.
Housing first, man. Yeah. We'll deal with that stuff later, right?
Yeah, I think I wrote down a quote: "When you're drowning, it doesn't help if your rescuer insists you learn to swim." And so it's that.
Let me do that later. Yeah. Just rescue me first, right?
Exactly.
So I think that's sound thinking here. You know, George, when you have a food shortage, you need more food supply. When you have a housing shortage, you need more housing supply. When you have a homelessness problem and you need places for homeless people to go, you need more homes. I'm getting tired of saying it, man. Well, another week has gone by, and again, I'm here before you thinking to myself, God, all week long, all I've heard people say in the media and elsewhere is, we need more housing supply. We need more housing supply.
Yeah.
I'm like,
I think wasn't today they even, like Pelosi and Ocasio, which again this is like very left leaning,
brilliant people.
Yeah, they're want to create a state of emergency for housing, like that. That was something.
Well, the trick with that is when government declares a state of emergency, it allows for all sorts of things to then happen.
Yeah,
like money can start flowing. The process for enacting legislation and bills and decision making is different than without there being a state of emergency.
Right.
So I think that's strategic. Yeah. I don't think they're saying it's an emergency.
Right. Yeah.
I think they're saying, fuck, we got to do something.
Yeah.
Let's declare a state of emergency, because when we do, these 5 things can happen way faster and without the bureaucracy. So whatever. I mean, I get that.
Yeah.
I get that.
But I think just again going along with that theme of need more housing.
I mean, if they were smart, they would have declared a state of emergency with housing years and years and years ago.
Right,
but no one ever thought to do that.
Yeah.
Now, when it's too late, they're like, oh, let's declare a state of emergency.
Yeah.
Nothing like retroactive governing.
Yeah. It's also interesting that this Houston story contrasts so heavily with San Francisco. Did you read that Atlantic piece by Nellie? I think it's Nellie Bowley.
I didn't.
I'll send it to you, but it was like, it's so dark.
Well, San Francisco is
so scary.
I had dear friends of mine at my house who are from San Francisco. They were with me last week, and we talked a lot about this.
Yeah.
And I said, guys, is it really as bad as we all are reading about, or is it just like being dramatized? Like, what's the story? And they both looked at me, and these are liberal people, and they were like, Peter, it's bad. Yeah. There's homelessness everywhere. There's people are defecating in the streets. Yeah. They're living under overpasses. There's it's bad.
Yeah. Dying in the streets is what I saw.
Dying in the streets.
A lot of people like lying in the streets.
It's horrible.
Yeah.
And San Francisco's just they can't seem to do anything about it.
Yeah.
It's like lawless. It's like we're not going to arrest you if you go into a store and rob the store.
And it's even trickier with that because it's not that they're just not arresting people; it's that they're not prosecuting people. So why would you arrest somebody if you're not going to prosecute them?
You can't have a lawless. San Francisco is the closest thing we have to lawlessness anywhere in this country. And it's crazy, and they think it's okay.
Yeah. Well, we'll see after the recall. We'll see if things shift around.
They think it's okay.
But,
nothing's changed, but it's always been like that. It's always been like the bastion of this progressive thinking. I love progressive thinking, but it's got to work. I mean, at some point, when shit doesn't work, it doesn't matter that it's progressive. You have to say it's not working.
No, I think that's the thing that this author, Nellie Bowles, who wrote the article about San Francisco, she's very I would not describe her in any way as a conservative. And if you had read this article, you'd be like, oh, this must be someone who's very conservative leaning. But it's just because things are so bad in San Francisco.
George, I have a lot of liberal left leaning people in my life, a lot, between the artists and the musicians and the teachers and just all these people who are important to me and close to me, who I spend a lot of time with and we talk, family members. I got to tell you, it seems like every one of them has hit their limit, and they're all like, man, I'm liberal, but this shit's way out of control. And I'm not picking on liberalism. I'm just saying, totally. If they were conservative and they were fed up with being conservative, I call it out too. Right, I'm not picking sides. I'm just happening to notice that I'm seeing it a lot.
Yeah, well, I think what I'm noticing are politicians that are on the quote unquote left are actually not being progressive. They're not actually
Right.
They're not actually seeking innovation or growth. They're actually being conservative, but within the spectrum of a left-leaning ideology. And so now you have two conservative parties, and that's where it's
two conservative. Right.
Yeah.
George, when I first met you, I had you pegged for a liberal guy. Has spending more time with me pulled you more into the center?
I would imagine so. Yeah, I think I think
Proud
I'm
of that.
always kind of in flux. I think I grew up probably leaning conservative, growing up kind of a more religious background, and then I went to art school and lived in the city, and that probably shifted me way to the left. And so I think there's always things are always in flux.
Yeah. All right. Well, I'm glad that you're in flux, buddy.
Last thing that I have to bring up is you've brought up building the city before when we talk about consolidation of assets. And that phrase always kind of stuck out to me. What does it mean to build the city? How can owners and operators use that framework to gain success on their own?
So, good question. Couple of things that I've done recently. I now own a plumbing company. Why do I own a plumbing company? For a couple of reasons. Number one, I think it's going to be a great business. I think the amount of people going into the plumbing and electric and HVAC and carpentry trades is getting lower and lower. Everybody is seemingly 45 years or older who's already in those trades. So they're sort of aging out. And you can't get a plumber or electrician when you need one. And I think the day is going to come soon where they're going to be charging us $1,000 or more an hour to come fix a toilet or a leak in the sink. Watch, mark my words. So I got into the business for that reason, but I also got into the business because I own real estate. My real estate needs the services of plumbers. So now I've got a plumbing company that can service my real estate. My real estate will pay for it, but there's synergies there.
Right.
When you say build a city, that to me is an example of how I do it. Another example of how I do it is I don't buy a building in California, a building in Texas, a building in Maine, a building in New York, a building in Florida, and I'm like all over the place in all these different locales and all these different markets with all these different customer bases. I buy a building in one spot, and then I buy as many as I can around that same spot. Look, I've already done the due diligence, the hard work, the heavy lift for the first property. I've already signed off on it. I've already given it my vote of approval for the one property that I already have. Now, I'm just going to add to it as much as possible because running one property is the same as running 10. It's the same as running 1,000. So I'm going to minimize my travel time and my inefficiencies by clustering them. And so I'm building my city that way. Another way that I build my city out, George, is that all this real estate that I own and manage and operate, they all need landscaping services. They need to have the grass cut. They need to have snow removal in the wintertime. So I own a landscaping company. My landscaping company has the contracts for all of the properties. Now, if they're paying a fair market price, they're not getting a discount because it's my real estate paying my landscaping company. So it's fair, it's reasonable. I'm keeping people employed, but I'm in control of my landscaping. I'm in control of my snow removal. Let me tell you, nothing is worse than in the wintertime when it craps snow all in your parking lot. You've got, 6 inches or a foot of snow, and people need to get to work, and they're like, where's the snowplow? And you're like, I don't know. We called the snowplow company. But with me, I say, yeah, we'll be there in 10 seconds because it's our company, and we call our foreman, and he gets the trucks and guys there, and we're scooping out snow.
Yeah.
So to be able to control that kind of stuff is important. And look, each building is paying, $4,000 or $5,000 a year for landscaping anyway. So if you have 5 or 10 or 30 buildings times, $5,000 each, if I have 30 buildings paying 5 each, it's $150,000 a year. I mean, I'm paying that to someone. I may as well have the company and pay myself.
Yeah, that makes sense. All right, well, that's what I got. Did you want to go on the quotes today, or do you want to hold those for later?
I'll share one quote with you. So I love sayings. I love quotes. I love to ponder the meaning of concisely delivered phrases.
Yeah.
And I always find that to be so interesting. And I love that stuff. I love reading your quotes and phrases, and I love perhaps offering some of my own. My mom, I went over to visit her the other night for dinner, and she went through an old file that she kept for me and all my brothers, and she pulled out some quotes. And she said, Peter, I know you like quotes, so I pulled some out for you. So I'm going to share one with you.
Yeah.
So my mom, Denise Siegel, we're going to get her on here one day.
Yeah, that'd be great.
She said, never ever wrestle with the pigs. You'll both get dirty, but the pigs will love it.
I love that.
Now, I don't think that she coined that phrase. I think she probably read it somewhere and wrote it down, but she gave it to me because she knew I would like it. I do. I love that one.
Well, that always touches on, you're always saying stay positive, don't get bogged down by negativity.
Yeah.
It's like that thing.
Yeah. I love that my mom gave me that one, and I love what it means. And the quote's right. She's right. Don't wrestle with the pigs, man, because you'll both end up in the mud. The pigs will love it. You won't. You're going to get the short end of the stick.
Yeah, that's beautiful.
Yeah, I like that.
Yeah, I have a Google Doc of just quotations that that I just keep.
Send that to me.
I will. Yeah,
please.
Yeah. And so I wonder if your mom was doing something similar but analog. Just write.
Yeah.
It down,
well, we can have a quote of the week segment or whatever. I mean, we just talk about it. So she gave me a quote from the Dalai Lama, who said this about wisdom.
Okay.
When you talk, you're only repeating what you already know, but when you listen, you can learn something new. So simple. I think I've heard that before.
Yeah.
But so simple, so pure, and so true.
Yeah.
Right? So let's just take a minute and stop and listen, because I want to learn something. Ready? Go.
Oh, I thought I was supposed to listen as well.
You were listening. All right. You know what I just learned? That you can't follow directions. That you're impatient. That's what I just learned.
Oh, why am I impatient?
Dalai Lama is well, because we were supposed to stop and listen.
Oh, so you did want to.
I wanted you to listen.
Okay, all right.
That's why I. Oh my God, George, it's time to end this, man.
Sounds good. I'll head over to Q&A and we'll get this done with.
Thank you. Thanks,
you.
everybody.
All right, Peter, I got a Q&A for you.
From who?
This one is Lacey Steelman.
Lacey Steelman.
Yeah. So she says, do I need to wait until I have a deal lined up before I start raising capital from investors, or is it too late at that point?
Classic question.
Yeah.
Do you have a fund and a pool of capital sitting there ready to be deployed, or do you get the deal first? George, I get this question all the time. Here's the answer. Go get the deal.
Okay.
Go get the deal first, Lacey. If you get the deal first and it's a good deal, the money will come so fast. There's so much demand from investors for great deals. If you get the deal first, you'll always get the money if it's a great deal. If it's not a great deal, the market's going to slap you in the face and reject you. And it's going to say, hey, I don't love something about the deal or everything about the deal. I don't love the sponsor. I don't love the location. I don't love the revenue. I don't love the return, whatever it is. If it's a great deal, you're going to get it funded. If it's not a great deal, you're just not going to get it funded. And then you have to offer great investment terms to your partners who are going to fund it. Absolutely get the deal first. Don't spend your time getting a whole bunch of money together for a deal that you don't have. Your money's going to be impatient. They're going to ask, have you deployed it yet? They're going to ask what you have in the pipeline. They're going to ask how much you're paying them while their money is sitting there in the bank account that they funded into that you control, but yet you haven't deployed that money out into the investment yet. You have to pay your investors. The clock's ticking. You don't want to be under pressure to deploy capital because you have a ticking clock. You're going to make poor investment decisions. It never goes well. Don't do it. Get the deal first, fund the deal second. Look, it's an imperfect world. A lot of times it all happens at the same time. We're scrambling. We get the deal, and as we're locking it up, we're lining up the investors. And as we're signing the contracts and putting down deposits, we're getting money in. It's crazy, but this is what we signed up for as entrepreneurs. If you want to be an entrepreneur and you want to go out and put deals together, get the deal first. Guys, there's so many deals that come across my desk. It's all I do. I look at deals every day, all week long, hundreds and hundreds and hundreds of deals. My head's going to explode. Most of them are throwaway. I have to look at hundreds, if not thousands, to find a few that I can then chase down and maybe lock up under a contract and then perform some due diligence to see if I even want to close on it. There's so much demand for great deals with great operators. You're going to get it funded really quick. Lacey, go get the deal first. Good luck.
Love it. All right. Thanks so much, Peter. And thank you, Lacey.
Thanks, guys.